That's cool. We don't, you don't see that kind of thing in Utah.
Yeah, these big shipping containers.
Wow. Or Ohio, for that matter.
Hey, welcome to another episode of Spill the Beans. We're here in beautiful Charleston, South Carolina, and my dude Tate Siemer, who is part of my Legacy Boardroom mastermind. Check out legacyboardroom.com if you're interested in diving into a mastermind group. But he actually flew in from Utah to come and sit down with me. First person ever to fly in and plug in to Spill the Beans. So super excited to have him. I'm gonna take him out for a awesome dinner later on tonight, some drinks, and continue the conversation later. But he's gonna offer some great insights on how he built a portfolio of 550 doors in the past 14 months. The dude is a stud, has a ton of wisdom behind him, and he's got some big ambitions to do some big things over the next really 15 months or so. Wants to get up to 2,000 doors. So check this out. You're gonna love all the content that Tate shares. Tate, what's up, buddy?
So good to be here, man.
Dude, I'm excited.
Yeah.
You're the first person who's actually flown in to come and see me, man. Like, I appreciate you.
I just, you know, I'm a fan and obviously part of your tribe, and this was too good to not come and do. So
I know. No, I appreciate you, man. It's usually, you know, I just grab local entrepreneurs. I haven't really asked anybody to come in from out of town. So if you're out of town and you have a business that's doing 7 figures and you want to hop on Spill the Beans, hit me up. I'd love to have you come into town, show you around Charleston. We're gonna go have a big steak dinner tonight and have some fun in Charleston. So hit me up if you guys do want to come in town. Yeah. So awesome, buddy. All right, so obviously we've known each other for about a year now. You're part of the mastermind. We've had some engagement. I've been on your podcast, and obviously you're on mine now. Share your background though. I know that you used to do single family. I know that you just do some development. And you've had some amazing results over the past just over 12 months in the multifamily world. And I want to hit on all that stuff, man. Like, I know we were just talking before, like the 2 biggest questions I get are how'd you get started and how'd you scale from single family into multifamily? So I want to spend a lot of time on those 2 topics talking. So give me kind of your history and your background and kind of what led you to where you're at today.
Yeah. So originally from Cincinnati, Ohio, and went to college in Ohio, but followed my dream to ski in the Rocky Mountains in '99 out to Utah, and I've been in Utah ever since. I'm originally a photographer, weddings and skiers and couples and families, and lots of formal commercial photography in my background, but got into real estate in '06.
Time out. You know what's cool about this is Cameron, who's behind the camera right now, sat in on these for the past, you know, I mean, obviously for like 10 months now, but like within the first 3 months, she's like, I want to do some real estate. You think I could buy something? I was like, yeah, I think you can. And she actually bought something by July. You closed on something, right? In July, closed on her first house. She's house hacking it.
So good.
And you know what's cool about sitting down with people from different backgrounds is like, maybe Cameron couldn't associate with me, right? Like, some random guy, whatever, he's always been in real estate. But then all of a sudden somebody comes in who has a photography background and she's like, this guy used to do corporate videos. This guy used to do that. And all of a sudden it creates a connection there where she's like, if he can go and pick up 500 units and he has a background in photography, I could probably go and pick up 500 units and I have a background in photography. So it's just like, isn't that cool? I think that's cool. I think I think it's really unique to hear people's stories. And you know, I've had buddies of mine who are firefighters who are like, dude, I really aligned with that guy because I'm in the police force, or I'm a firefighter, or my dad was a firefighter, or I was in the construction industry, and you know, and this guy was in the construction. Dude, it's cool to see people from all different walks of life and all different backgrounds being able to say, it doesn't matter, right? Real estate's an equalizer of individuals to be able to build massive amounts of wealth. So it's just, I don't know, quick aside on that, but I think it's a really powerful and impactful and important thing to address.
Yeah, and the people around you inform what is possible for you. Like, you know,
for sure.
As a mountain biker and a skier, I've always felt like if I can watch somebody in front of me do what I need to do to get over that obstacle or you know, over that cornice or whatever, I'll figure it out if I can watch them do it. If somebody goes in front of me, and if I've never done something before, I've always had that attitude. Like if he can do it, I can do it. As long as I can make a study out of him and watch him. So, yeah, I love that too.
Good stuff, man. So, go from photography, move out to the Rockies.
Yep.
You're hanging out, doing a lot of skiing, and
I was doing the grind of photography, and it's a tough business, and it's very, very, very hands-on, and people you can't leverage because people want you, they want to hire you. So I was in search of just lifestyle change and really lifestyle by design. I picked up the 4-hour work week and caught the Tim Ferriss vision for some of that stuff, and really like just embraced real estate investing as a vehicle for financial freedom and independence, but really didn't see the full vision until maybe 3-4 years ago, and we can kind of get to that point. But we got really busy flipping single family houses, we being my partner Carl York and myself, and about 10 years ago we thought it was the smartest thing to GC them ourselves, fund them ourselves. We didn't scale, we didn't leverage, we didn't have smart people around us with other smart people around them to inspire and inform us, and we just weren't doing things in a very efficient way at all. And it was and single family flipping is a tough gig, as many of you know, and it's a paycheck and it's speculative, and so therefore there's inherent risk.
Some people don't realize like how speculative it is, right? Like you go and contract a house, and it's not based on the income approach like commercial real estate is. Commercial real estate, you can say, hey, it's like a business, it brings in this much revenue, here's what the expenses are, here's the net operating income, and now it's some sort of multiple of that.
Yeah.
And that doesn't change that much in 6 to 12 months.
That's right.
Residential is not based on the income approach. It's based on comparable values, which is based on essentially emotions of the marketplace and whether people think that property is worth that amount or not.
Yeah.
And so, dude, you're going and buying a house today that you're planning on flipping or developing that could be 6 to 12 months down the road before it comes on the market, based on comparables of what things sold for in the past 6 months.
That's right.
You don't know, you don't have a crystal ball on where the market's going, and I don't think people realize how speculative residential really can be. You know?
Yeah, and you also don't have a crystal ball on knowing whether your contractors are going to show up, or do things well, or walk away with materials, or
city's going to beat you up and make you jump through hoops and wait for approvals and permitting. And we got to deal with a lot of that stuff on the commercial side too, but at least we have a cash flowing asset. The residential side, typically you're building or fixing in order to resale.
And you've
which
got
is the
holding
tough part.
costs. You've got no income through that. You just got nothing but costs. So
that was stressful for me, man. I wasn't good at just sitting on it and knowing that there was holding. Like I would take the first qualified buyer, and I wouldn't wait for my price because I couldn't stand the holding costs. It was too much of a stressor on me.
Yeah.
And that's what was a differentiator for me in the residential side was if it didn't sell, I didn't care because I had enough cash flow, right? I had tenants in place, paying rent, covering my operating expenses, paying the debt service, and putting cash in my pocket. I could wait for the sales price and really posture up more for anybody who wanted to come in and try to buy that property, So anyways, keep going.
Yeah, so we did it. We went from single family model, flipping 3 to 6 houses a year maybe, to developing and doing land entitlement deals where we were buying raw land that was zoned for dense multifamily. We were having the land entitled for townhome projects or an apartment building, and then we were selling that project unimproved to a developer or a builder. We did a very highly speculative process.
Yeah, big upside, big downside.
Yes,
right?
and did that a number of times. And in the same time, we were also.
You would just do the entitlements. You wouldn't put in any infrastructure or anything like that. So you would just change the zoning and then sell it off to some developer or builder who would go vertical with it.
Yeah, and most of the time we were dealing with existing zoning being proper. We just needed to get essentially like building plans approved.
Got it.
Site plans approved and whatnot. So
do a lot of, like, how hard is that to sell that? Like if you brought me a deal, you're like, hey, this is here's what you can build here. And you gave me all the architectural renderings and all that kind of stuff.
Yeah.
That's cool, but now I have to build exactly what you thought would be highest and best use here. And I might think there's a higher and better use, or maybe I have a different exit strategy. Like, I don't know, did you run into, I don't know, kind of button heads with buyers on that stuff, or is it hard to find buyers on that?
It takes a specialized buyer. Luckily, Utah, where
you go find the buyer first and then go and kind of reverse engineer it?
That'd be too smart, I think. We've done it this speculative way, in terms of just finding what we think is a good deal, what we think or know we can sell, a per unit price on, let's say, we get a quarter acre or a half acre, and we can put 30 or 60 apartments on it. We know unimproved papered units are going to sell for
20 grand a unit or something.
20 grand a unit, something like that. And therefore, and then we can kind of reverse engineer from there and pencil the deal. And then we did what was really almost fatal for us, which was we tried our hands at actually going vertical and doing new build development in the townhome space and luxury townhomes in downtown Salt Lake. And $1 million plus products, each one was $1 million. And as far as what they sold for in the end, but very, very long story short, 2.5 year process, made a lot of mistakes, hired a lot of not so great hires. And
what year was this?
This started in 2000, at the end of 17.
Okay.
And
so you just wrapped this up a couple years ago.
We just wrapped this up. Sorry, so 18. So we just sold the final units in the first part of this year.
Wow.
So
that's stressful, man.
We've had these on our backs had them on our backs for 2.5 years, almost 3, and they were really slow-moving train wrecks. In that, pretty much 6 months in, we knew that they were going to be very, very challenging to get out of and break even. Like even that was going to be a big challenge, and we watched a lot of things go wrong that were out of our control.
Dude, that's so stressful. Like the first few months in, you're like, we're breaking even on this, and I have to go and work my tail off for the next 2 years. In order to break even. It's just so like disheartening.
It is, and honestly, like it really challenged me at a personal level. It took everything that I had in the way of like mindset, skill, and it says
a lot about you to see it to the finish line. Knowing that early on. And not throwing in the towel and not, creating excuses or blame or just being like, somebody else can pick up the pieces here. Yeah. Like that says a lot to your character that you got it done.
We did get it done, and we tried a number of different things along the way, but in the end we finished them, sold them, and lost a fair amount of coin on them, and learned a lot. And in the meantime, as a result of those deals being built and on the market, I had an agent come through. And he and I got to talking. He was showing a buyer our property, and I was telling him about us getting into multifamily, into apartments. And he said, "Oh, we've got an apartment that we're just about to put on the market, and it's a 20."
Last summer?
This was last summer, yeah.
Summer of 19 or summer of 20.
20, yep. And sure enough, we ended up buying it. It's a 20 unit, Class C minus at best property, and
it's like when I was in. When I was in high school playing basketball, all right, you like give your stats so that way they can print it in the thing. You're like, yeah, I'm like 5'11", right? You're like,
Más o menos.
And I think I understand what C minus at best means. Okay,
yes,
keep going.
Yeah. So we put almost, believe it or not, into 20 units. We almost put $1 million in CapEx into this place over the last year. And
20 units?
Essentially doubled the rents.
Oh, wow.
Yeah,
okay.
So we were able to get rents from the $650-ish to the $1,250-ish, actually $1,350.
All right, so let's do
on our 3 bedrooms.
Let's do some quick math on this.
Yeah.
As somebody calls me and I send them to voicemail. So you got about 600 or 650 is average?
So increase? We were averaging, let's say 650. That was our original rent.
650 more times 12 months.
Yep. Times 20 units.
Times 20 units is an extra $156,000 a year in rents.
And we're in a
and you invested an extra $1 million.
We're in a 5.5 cap market. So.
Divided by 0.055. So you invested $1 million, but there's a return on investment, right? Not only are you getting an extra $150,000 a year in cash flow, or revenue, I would say, gross rents, but it increased the value of the property by $2.9 million.
Yep.
It's a good ROI, bud.
Yeah. It's basically, it's
especially on 20 units, man.
I know.
That's a lot. That's a lot of spread on 20 units.
It's one of the best deals. Well, up till now, it is the best deal and it's the first deal we've ever really taken full cycle. We're about to list it.
Are you selling it?
Yeah, we're going to sell it because it's going to basically recoup everything from the townhomes.
Totally.
So we wish we could keep it. It'd be wonderful to keep it. And our plan is long term to be buy and hold investors. Absolutely.
Yep. But dude, you just got to do that. I'm selling off a bunch of my small stuff, a bunch of my C-class stuff, and or I have. Right, and I bought partners out of a bunch of deals and stuff all this year. Dude, it just cleans up some stuff, right? Like, and that cleanup, recapitalizing gives you a little bit more puff your chest out, a little bit more confidence, a little bit more posture in moving forward. And sometimes you got to take a step back in order to make big leaps forward.
Yeah. Yep. So that's what we're doing, and that was our first. So we acquired in August of 20 that 20 unit. And in the meantime, we were working on bigger unit count assets. One in Albuquerque we had under contract up until COVID hit, and our financing deadline was like the same day that the stock market crashed around COVID and blew up our financing. And so we didn't end up closing on that, but we were pretty dang close. We were well into 30 grand into due diligence and everything else on that deal.
Wait, this is early 20?
This was early mid 20. Yeah.
Okay, so this is after you bought the 20 unit though.
We closed on the 20 unit in August of 20.
Okay, so it was before you bought the 20 unit.
It was before, yeah.
Oh,
so we were going after these bigger ones. 2-3 years ago, I got into a coaching mastermind with Corey Peterson.
Yeah.
And
Corey?
Yeah, big kahuna. And he's
really,
character,
man. He's funny.
Yeah, he's great.
He's a good dude.
And we really got a lot of confidence from our association with him and our tutelage from him and our specialized knowledge and being able to speak the language and all that stuff. So as a result of working with him, we were really going after 150 plus units in San Antonio at one point, and then we really honed our focus on Columbus, Ohio, and started working our relationships there. I went there a lot. I was physically on the ground there a lot, shaking hands, having lunch, and over the course of a year or so, we had a great broker relationship. And
why Columbus?
Columbus is, well, first of all, there's some familiarity for me there. I went to college in Athens, just an hour and a half south of Columbus, and my dad went to dental school at Ohio State. My good friends' family still live in the area.
And, this is more based on resources, not necessarily the market itself, right?
No, we feel like it's a great market.
I think it is too.
And we wouldn't be there if we didn't feel like it was kind of not necessarily a unicorn market, but it's a market where you can buy these assets for 40, 50, 60 grand a unit that are, renting for 650, 700 a unit, but have great comps and upside up to, if you renovate them up to.
It's a growing city, man.
900,000, yeah.
It's growing like crazy, yeah.
Yeah, and so people love living there. There's kind of a buzz about the place that you don't get necessarily in Cleveland or Cincinnati.
Yep.
And so we love it there. And we're also acquiring in Oklahoma City. Those are our two markets.
I like that market too.
That we focus on and only focus on those. We have lots of great deal flow right now, off-market deals coming from good brokers that are doing really good work.
So dude, in just over 14 months, you've gone from 0 multifamily to 550-ish?
Yep.
Dude, how does that happen? How does that transition occur? it sounds like it was pretty easy to burn the ships, kind of like it was with me on the single family side. I just wasn't good at it, and I didn't like it, so I was like, let's get the hell out of this stuff.
Yep.
So it sounds like you just kind of burned the ships, realized that multifamily is really what but like, what were the steps that you took in order to go from 0 to 550? Dude, that's a lot of doors in your first year.
Yeah, well.
It took me, I don't know. I started buying apartments in 2012, built up to about 140 doors, sold those off because I had a bad partnership. And then it took me another, till 2017, then I had 550 doors, you know? No, early 2018. Dude, it took me 5.5 years to get to 550 doors. You did it in a year. How was that possible?
Yeah, I think you got to look, you can't take for granted the year or so before that really built the foundation. And
of what? Studying, joining the mastermind?
Yeah, just total immersion in the space, from every thought leadership avenue that you can imagine, whether it's audiobooks, podcasts. One of the audiobooks, I'll just mention, I mention it a lot, that was pivotal for me, and I don't know if you've ever even run across it. I haven't heard you mention it, but Lance Edwards wrote a book called How to Make Big Money in Small Apartments. And
I've heard of it, but I've never read it.
It's a really good audiobook. He reads it himself. He's got a thick Texas accent. It's funny, but man, did it set the stage for us understanding the whole game from a 30,000 foot view. It's funny how like one thing like that can make all the difference. Like it just catches you at the right time, and
students got to be ready, you know?
Yeah, that's right. And so we really just immersed ourselves, got involved with the thing with Corey. Adam Adams welcomed me into his inner circle group. I've been very fortunate in people being very generous with me and taking me under their wing, and my team as well.
Hey, what's up, guys? Hey, do me a quick favor. Give me your best takeaway so far from this episode of Spill the Beans in the comments below. Smash the like button, show me some love, please. And also, share this, subscribe to the channel, so that way you get all the new episodes of Spill the Beans. Appreciate you. You start really studying it in 2019, mid-2019. Join the groups, immerse yourself in education, podcasts, local groups, regional groups, national groups. You know, watching the social media, all that stuff. When did you start taking action, start making offers on apartments and multifamily deals? I went in spring of 2018. I went to my first national multifamily conference in Denver, and that was really like the first time I ever got my head around that I could do something like that. And then that really began the process. Spring of 18, actually. And so, you know, there's a process that gets us to 19, and when we do start writing letters of intent and making offers. I think that's an important realization for people to hear, because, like, hey, I started studying, and I went out to a course, and it's been 30 days and I don't have a deal yet. It's been 60 days and I don't have a deal yet. Right. It's been 180 days, I don't have a deal yet. It's been a year and I don't have a deal yet. Dude, one of my good buddies, Chad, who's in the mastermind and stuff also, dude, he came out to a commercial empire in January of 19, worked his ass off, hired a team, people making offers for an entire year without any results. What if he said, hey, at 12, I'm gonna give this 12 months and see how it plays out. And then he quit. You know what happened in month 13? We took down 105 units with him. Month 14, we took down 264 more units with him. Month 15, he bought 50 units by himself.
Cool.
Month 18, we bought another 128 units, and in month 19, or month 20, whatever it was, he bought another 72 units with us, and I think he did another deal or something on his own too.
That's awesome.
What if at 12 months, he said, I'm gonna give it 12 months, if I don't have a deal, I'm walking away.
Absolutely, yeah.
Dude, and he never turned the corner. He got all the way there, didn't go around the corner, and stopped. His life has changed because he didn't put a timeline on it, right? He knew real estate would eventually work. It's a matter of time. And you, from the time that seed was planted in early 18, took 2.5 years or 2 years and a quarter in order to take down your first deal. But then the momentum had started. It was already working under the surface enough where the momentum was there. You took down 550 doors from the time you took down your first one to 12, 13, 14 months later.
Yeah, you know, we were talking a little bit before we started about what Michael Blanc calls the law of the first deal, where it's all about getting that first deal done, because you've never done anything like it before. It feels massive and mammoth in scope and scale and everything else. But you do whatever it takes to get it done, get up over that hump, and then everything starts to change and transform and shift and morph, and you start to see deals, you start to see money, and your mindset really shifts at that point, because the universe is showing up in ways that confirms everything that you've been working for. So like it's really exciting.
It's like I always use the analogy of swimming, right? It's like reading about swimming in a book or actually getting in the water, right? Yeah. It's two very different things. It's like reading about New York City or watching movies that take place in New York City, and then the first time you go there, you're like, holy cow, now I get it, right?
Yeah.
All these huge buildings and all this busyness and people moving everywhere, like, or you know, going into the Sistine Chapel for the first time and smelling it and really understanding how grand it is. Like, you see it in the textbooks, but it's totally different actually doing it, experiencing it. And that's the same thing with your first real estate deal. Like, you got to go out and just do the deal. I was on a podcast this week, and they said, hey, what's the best deal you've ever done? I was like, the most impactful deal is the first one, every single time, you know? And it's not the biggest return I've made, but it set the stage for everything else.
Yeah, it's key, and like, you just got to do whatever it takes. Maybe you're going to bring in equity sources that you wouldn't otherwise bring in on deals 2 or 3 or 4 or whatever. We've done that, pref equity partners and whatnot, and you just kind of do what you got to do to get that first one done. I was talking to David Tupin, who's just a stud in this space.
He's another good buddy of mine. Yep.
Yeah, and
I might speak at his event. I don't know.
I think
I don't really speak at other people's stages anymore. It's like not my thing anymore. Not because I'm like too cool. I just don't like traveling enough. But he's a really good. He's got a really good following and base and people that he mentors. I like them a lot.
Yeah.
So I'm thinking about going and showing up, but he's a great guy.
Yeah. So, and he gave me all of his shoulds and the things that make a good deal, and like the things you shouldn't do, and your thresholds and everything. And then I said, well, what? So towards the end, I'm like, what would you tell somebody just getting started and trying to get over that hump? And he's basically like, well, just kind of ignore a lot of the things that I just said about, and just get your deal done.
Yeah.
Like, and that's kind of what it takes. And then,
dude, it truly is. Like, it's not even about the deal. I would go and do a deal, knowing what I know now. I would go and do a deal if I didn't have any experience without taking any equity. Or saying, hey, give me 1%. Well, let me just get in the game and see the processes and listen on the phone calls and be there to meet with the contractors and be there to meet with the insurance company and be there to meet with the lender's inspector and be there to meet with the management company and go and kick the tables and ask them you go and get that, like, feel that out, understand what that looks like, be on the phone calls, be on the webinars to raise the money, be like, you just sit in on all that. That is invaluable of just getting on that first deal.
The best way to learn is, best way to learn is to do a deal, and there's no replacement for that. You can sit in conferences, classrooms, podcasts, and that's all super important. And by all means, beef up on that stuff.
For sure.
But by all means, go do a deal too. And like you were talking about, it's been 30 days and I haven't found a deal yet, or it's been a year and I haven't found a deal yet. Like, if you can't, ask yourself what it is that's standing in the way between you and finding a deal. And if you can't get clear on that yourself, call somebody, call a mentor, a buddy, or somebody that knows the business and knows you.
You can't see the picture, man, if you're in the frame.
Yeah.
Like, you need somebody outside of the picture to be able to tell you what you're missing out on, right? Somebody with a 20,000-foot view who's not in the weeds. It's like a corn maze, right? Like, you're in the maze trying to figure out how to get through it. You need somebody who's standing on a ladder, being able to direct you, and because they can see the whole picture.
Yeah,
and
exactly.
it's so important to have that and have people with an outside perspective kind of pointing you in the right direction. Have you tried this? Have you tried that? What do you think is the biggest holdup with people finding a deal?
Well, one thing I think is people expect to find deals out of their markets without going to the market or the deal itself.
I can't tell you how many people send me deals in like East Cleveland in the absolute hood and be like, dude, this meets your buying criteria.
Yeah.
I was like, no, it doesn't. Yeah. Right? This is called a war zone.
Yeah. So like, you know, we were talking about one of the big things that made a huge shift for us was going to these markets, picking the market and then going to it. So you pick the market that you want to specialize in, and then you become an expert in it. Part of being an expert in it is being there and meeting the people that you need to do business. I live in a place in Utah where my deal criteria just isn't there. I can't cash flow properties in Utah. So that's why we're in Oklahoma City and Columbus. And so those are like second homes for me now, you know, and my team goes there, and we're there every month, every other month between the three of us. And, so go to your market that you're wanting to acquire in. And if you haven't done that yet and you haven't been like on the ground with brokers and property managers and other deal sources, I think that's a really big thing, is to go be on the ground.
I would 100% tell somebody it's way better to go deep into a single market than it is to go wide across many markets. The only reason I've gone wide across, I'm in 12 different states, is because I have people who intimately are familiar with those markets, and then they bring me deals. Yeah. And they're handling operations. They have the local resources. They have the local connections. They know the building department inspectors. They know those people. I just have to bring money. I just have to sign on the loan. I have to offer some advisory consulting type of intellectual capital, I guess. And it allows me to then get into some of those markets. But I know what we're good at, and I know where our value is brought. But dude, everybody, I'm like, either invest in your own market or find one market and pick up your first 300, 400, 500 doors in that market before you ever go wide. Yeah. And dude, even with, you know, over 4,000 doors right now, I was up to almost 5,000, but sold some off. Like, I don't like being in that many markets. I would rather just go deep. I love the, you know, coastal South Carolina, like, just because I'm here and I have resources and stuff down here. Coastal Carolinas and Georgia. I love the, you know, the Ohio market. I would do a ton in Columbus. I would do more in Cleveland. I do like Oklahoma City and stuff as well. And really anywhere in the Southeast I really like. But we're getting more and more picky, right? Because, you know, I went wide and I realized you lose out on scale, you lose out on efficiencies by going wide. I'd rather go deep.
Yeah. Well, the other thing that you're doing too is you're moving up an asset class, right? So you're moving you're moving your C properties, if I understand you correctly, and really keeping your Bs and
moving more to A's.
Moving more towards acquiring Bs and A's, right?
Yep.
And to me, that's a sign of like serious progression in this space, because the A's and the B's are harder to pencil. They require sometimes more capital down, et cetera, right? You don't have these huge rent premiums necessarily that you have in the Class C space. But that said, they're less risky, right? Amongst other things. And
they're almost seen as like long-term bonds, right? They're not going to go up and appreciate in value. But like their cash, like that's why I understand why Cardone does what he does, right? He has access to so much money. I heard he raised $600 million so far this year.
Wow.
That was about a month or two ago, actually. So it's probably more than that.
Yep.
$600 million, and I think he pays like a 4 pref or maybe 5, maybe up to 6. And he's got everybody on a 10-year time horizon. If you have that cheap of capital at that type of a time horizon, you can go overpay for properties in A-class areas because you know they're not going to lose value. You know they will sustain value, and he knows that they'll appreciate enough over the next 10 years. He knows that they can chip away at enough principal and pay down enough principal over the next 10 years where he will be upside on these things, even if he overpays for them or pays a retail price for them today.
Yeah.
And dude, he's taking upfront fees, he's got acquisition fees and asset management fees, and he gets a lot of the depreciation on all this stuff. And, so it makes sense how his business model is. Guys like you and me, we don't have access to hundreds of millions of dollars at that type of a term and that low of a rate in order to go deploy it. And that's why, I had to start out in C-class properties and create equity and create the reputation. But now we're getting access to more capital. And dude, what I've found, especially like getting into the like the high-end luxury Airbnbs, like the mountain house and the island and stuff like that, is like people want different things in their portfolio. It's not like a one size fits all in these value-add apartment complexes. They want luxury assets with a lower pref, but maybe access to them, right? They want luxury assets with a lower pref, but longer term stability. They want some of the higher value-add type stuff with better returns, but seen as more risky or a little bit more management intensive. They're okay with having a few of those in their portfolio. And so we're having conversations with a lot of our private money lenders now of like, what do you want? And really more order taking than it is of like, this is what we've got, raise your hand if you want in on it. And we're kind of allocating people towards different types of deals or helping them allocate their liquid assets to a more diversified portfolio that way,
Yeah, I mean, everybody knows diversification's super smart thing to do, and we were talking crypto earlier, and like that's a great place to be diversifying as well. And but yeah, within the real estate world, I think being in multifamily and being in apartments across different asset classes is really a smart thing.
Yeah. I think, and truly, like the C-class stuff for where I am right now is just management intensive. It might come to a point where we build out our own management software. We build out, and I'm working on this already, our own management software, our own management firm, or take one over and put our SOPs in place and do some certain things in the prop tech industry and layer that with the operational side of owning properties. And it might make sense for us to then get back into C-class because dude, there's a lot more upside to those. If you can manage it and you can dial in management really, 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 really well, dude, there's some serious upside into C-class.
That's it.
But for where I am,
and if you don't get that piece right,
then there's serious downside.
You're hurting.
There's serious. I mean, I always tell people like the best returns and the worst returns are usually in that CD class area, right? Of any deal I've ever done, it's usually they get the most upside, but they have the most downside if they're not managed properly. And I don't want to get back into C class until like we're really, really, really dialing in. Obviously, our operations and stuff are already dialed in, but like we're looking at a lot of things to just give us an edge over monetizing assets, increasing income, decreasing expenses, that a lot of other investors aren't doing, and the only thing that they're looking at is rental income and laundry income. We can monetize it and increase rent per unit, not rent per unit, but revenue per unit by 15 to 20% more in addition to rents and laundry income. So now that makes us a game changer because we can go pay retail price because everybody else is at retail price. We can go pay that, but we know how to still make that a value add, right? And increase that. And you can do that more on the C-class stuff than you can on the potentially on the B and A class stuff. But I'll probably get back into buying big portfolios of C-class. That'll probably take me from $1 billion to $10 billion in assets is when I get back into C+ kind of stuff, or areas that are kind of transitioning and have upward potential. Maybe, I don't know. I also might get shit rich in crypto and just
just call it good.
and just keep on buying A-class stuff.
Well, do it. Yeah,
for depreciation.
A-class and islands, right?
Yeah, exactly. So we'll see where that goes. But,
yeah.
No, but that's amazing, man. You're making some big strides. What does the next 12 to 24 months look like on your time horizon right now? Like, what's the goals?
Yeah, so we've got 60 units under contract that'll be closing here in a couple weeks. And then we've got some projects in the pipe that one big one, so just under 400 units, that we're we're working hard on LOI stage. But our goal is to have 1,000 units in Columbus and 1,000 in Oklahoma City by May of next year. So we've got some work to do, and
so it's about 7 months away.
Yeah, and by have I mean either own or have under contract.
Yep.
But yeah, so we've got big goals. Our initial goal was to do 500 doors this year, which we've done. We had to up that to 1,000, which will hopefully be doable, and we'll be getting done. And then, like, for me, like, one of my big whys, probably my biggest why, as far as being really successful in this space, aside from the lifestyle design piece and just living large and living an inspiring life that brings other people along, is to have such a high level of success that it qualifies me to coach people of this level of success, right? So in other words, like Tiger Woods had 5-6 coaches at his peak, his premier. None of them played necessarily golf as well as he did, but the world of coaching, and in my opinion, is that coaches are so valuable and can make such a massive impact in transforming, you know, your life and your business and your relationships. And I'm working with a coach right now, and so I've always had this ever since college. I was a psychology major, thought I might be a therapist or something, but didn't want to. I don't know. Just I love the coaching perspective coming from, let's create a vision for you that excites you and that inspires you, and go after that. And whatever's in the way of that, let's get it out of the way, but let's go after that. And as opposed to let's look back in your past and figure out what was wrong and all that stuff. So
how did you go from 3 to 6 single family deals a year to thinking big enough to be like, let's take down 500 units in 2021?
Yeah.
What hurdles did you have to get through? How did you work that muscle and exercise that muscle so much that you could think that big?
Honestly, a lot of it was those townhomes. And because those townhomes forced a decision every single day. It was like, I'm going to get up, and we've got this dark cloud hanging over our business right now, and we know it, and we're going to have it for a while. So I'm either going to get up and go out and do everything that I can that's under my control to keep things moving in the right direction from the captain's quarters, and choose to have faith. And I'm not necessarily a super religious person, but I think I'm a spiritual person by nature. And it really came down to, like, you're either going to have faith that this is going to work out, or you're going to be in a state of helplessness and hopelessness about it. And so it developed this muscle around, like, every day showing up on my A game, like, and knowing, eventually just knowing that it was going to work out somehow. The
stakes are too high, man. You gotta show up and give it your all every single day. Like, kind of what I'm thinking as you're talking through this is like the financial thermostat, right? Like, when you're losing money, you're like, damn, I need to go make that much more money somewhere else. Right? And whether you kind of conceptualize it or not, or realize it or not, you're like, I need to show up and make sure I lose as little money over here as possible. At the same time, I need to find something that's going to generate enough revenue, enough income, enough wealth to offset this loss over here. And you start just thinking at a bigger, right? Like the loss is so big and it seems like detrimental and all-consuming. But at the same time, dude, it was a little bit of a catalyst, or it sounds like it was more than a little bit of a catalyst to you, to start thinking bigger and think like, dude, I need to go and make more money. I need to pick up 500 units in order to offset this garbage over here. You know what I mean?
Exactly.
I think that's pretty cool. That's a big mental shift, man. So over the course of the next 2 years, we're looking to get 1,000 doors in Oklahoma City, 1,000 doors in Columbus, and then here's the thing, like, dude, there's no reason you couldn't start leading and coaching right now, right? 550 doors in the first year. Like, I think that is a more compelling story than 5,000 doors in 5 years, right? Like, I think being able to, like, people can conceptualize 100, 200, 300 doors a little bit easier than they can conceptualize 5,000 doors in 5 years. You can be like, hey, here's my first year from buying and selling. Here's what we were able to do. And I think you attract people at a different level or different depth of connection, I guess. By talking about your story earlier on, man, I think there's no reason that you couldn't. And as you're talking about wanting to lead people, like, I love that because, you know, one of my goals early on was like, I want to help 1,000 people make $1 million of net worth minimum. That's $1 billion.
Yeah, and you're doing that.
Of value, right?
I love it.
The more impactful piece for me is creating leaders, right? Inspiring guys like you to then go and be a leader and be a coach and be a mentor to others and help 1,000 people. Each create $1 million. Now, if I could be a small catalyst or a ripple, the beginning of a ripple effect, and help 1,000 people, help another 1,000 people create $1 million, that's $1 trillion of value, you know? So, dude, I love the idea of, you know, the mentorship, right? We just need more leaders. I know a lot of people, you know, as soon as you hear about coaching and that stuff, people are like, oh, another guru, here they come, that kind of thing. The reality is, it's not another guru, it's another leader. It's another person inspiring. It's another person educating. Another person sharing knowledge in the right way, you know? And we need more leaders, dude, desperately in this country. We desperately, in this world, we desperately need more people who can inspire others, educate others, and lead them in a way that sets them up for a better life and helps them think bigger and understand other opportunities and what their value and what their potential can be. You know, just there's not enough of that out there.
Yeah, and you know, a thing I love about this space in general is it is the perfect space and kind of arena to develop yourself and to develop your not just personal skills.
It coincides with personal
professional
development
skills.
very well.
Yeah, I mean, and your portfolio doesn't expand unless your mindset expands, right? And it's causality. They're directly related to each other, and so the more that you can really throttle the mindset piece, which you do have total control over, whether you think it or not, you know, the better off you are, and the more powerful you are, and the quicker you can move towards 500 doors or whatever it is you're after. So, and yeah, like you said, I mean, the world needs leaders. The world needs all of us really at our highest and best, whether we're, some of us are wired to be leaders and entrepreneurs and innovators, and some of us are tacticians, and some of us are great on the execution side. Carl, my partner, is as good as it gets on that stuff. And we need all of it in our team. If all of us aren't at our highest and best, we're not doing as well as we could, and we're not being as effective as we could. And generally we step up. You know, our team steps up, and when we step into this space, and this is what we're doing. We're doing high-level apartment deals, and we're running a business that acquires and operates apartment communities in a really good way. I'm doing it, and we step into it, and
love it, dude.
It's a way to step up in the world. You know?
Love it, man. No, it's all good stuff, dude, and ton of insight, ton of good conversation. Dude, I love that you came into town. I'm excited to go and grab some drinks and get some good food and see where the conversation continues. So appreciate you being here, brother.
Yeah, my pleasure. It was awesome.
Man.
Loved it.
Hope you guys got a ton of value out of that. Tate is an absolute stud, has a ton of wisdom behind a lot of the things that he said and a lot of the experiences that he's had. He's interviewed some of the biggest people in the multifamily industry, so make sure you check out his podcast, give him a follow on social media, and I'd love to hear your biggest takeaway from that conversation in the comments section below. And as always, if you know somebody who's gonna get a ton of value from this, please share it with them and give me some likes. Please subscribe to our channel. We drop Spill the Beans episodes every Sunday with a new rockstar entrepreneur. So appreciate you, love you. Until next time, be your best.